While the United States is experiencing the worst inflation in 40 years, China's inflation has remained stable, the Beijing authorities claim. China's state media attributes the U.S. inflation to its government printing too much money and accuses the United States of exporting inflation. But we know that the Chinese Communist regime has printed much more money than the United States. Why doesn't China see as much inflation as the United States does? What happened to all the extra money China has printed? Can it be related to its real estate market? Hello everyone, welcome to Leisrealtalk. I'm Lei. American mainstream media attributes the U.S. inflation mostly to the troubled global supply chains, higher labor costs, and the energy crisis. When it comes to the subject of printing too much money, left-leaning media either just gently touches on it or avoids mentioning the Biden administration's big spendings altogether. But the Chinese state media outlets aren't so gentle. They blame the Americans for printing money excessively and exporting inflation. So, which government has printed more money? Let's go to the bottom of the issue. In 1990, China's broad measure money supply, or M2, was 1.4 trillion yuan. By the end of 2021, it increased 171 times to 238 trillion yuan. By comparison, the United States M2 in 1990 was $3.3 trillion. By the end of 2021, it increased 6.5 times to $21.5 trillion. So within the same period, the American government printed 6.5 times more money, while the Chinese regime printed 171 times more money. Let's take a deeper look at this. In the United States, a person's wealth had to have grown 6.5 times as much in the 32 years from 1990 to 2021 to keep up with the speed of monetary growth. In China, however, a person's wealth had to grow 171 times as much during the same 32 years. If not, inflation would have caused him to be worth less now than he was 32 years ago, even though he now holds assets with higher value. China's GDP in 1990 was $361 billion US. It grew 47 times as much and reached $17 trillion US in 2021. So, China's M2, or broad measure money supply, grew 171 times, while its GDP grew 47 times from 1990 to 2021. Let's look at the same set of numbers for the United States. The United States GDP in 1990 was $6 trillion and grew fourfold to $23 trillion by the end of 2021. The US M2 grew 6.5 times as much, while its GDP grew 4 times. China's money supply growth is 4 times faster than its GDP growth, while the United States monetary supply grew only 70% faster than its GDP growth. When the money supply grows faster than the GDP, it brings inflation. So based on this analysis, China should have much worse inflation than the United States. But why haven't we seen China's inflation going through the roof? Economists have many explanations. The Consumer Pricing Index, or CPI, measures inflation. China's definition of CPI, however, is different, and how it's calculated is not known to the outside world. But that's not what we're focusing on today. I want to offer an explanation of China's inflation, or the lack of it, from a different perspective, and it's related to China's real estate market. In the wake of the 2008 global financial crisis, China introduced the largest stimulus package in the world in the amount of 4 trillion yuan at the end of 2008. 2 years later, in 2010, the former governor of China's central bank, Zhou Xiaochuan, came up with his so-called pool theory. Zhou described his pool theory as this: if short-term speculative capital wants to come into the market, the central bank will put it in an isolated pool rather than let it spread throughout China's real economy. People believe that Zhou's pools refer to the stock market, property market, and the bond market. And his pool theory was a way to keep the hot money in these markets in order to prevent it from entering the real economy and causing inflation. In the past decade, we have witnessed the Chinese rushing into the housing market. The super rich moved their money to invest outside China. the middle and upper middle classes have been hoarding properties in China as value-preserving investments. As Chinese continue to put their money into real estate, they help the government keep inflation down while driving housing costs up. Housing costs in large cities soared to between 40,000 and 50,000 yuan a square meter, which is about $6,000 to $7,000 per square meter. And in Tier 1 cities like Beijing and Shanghai, prices went over 100,000 yuan per square meter or $13,000 per square meter. But Chinese kept buying. On average, 40% of Chinese families own more than one home. China's real estate market is no longer a pool as Zhou defined, but a gigantic reservoir that holds a big chunk of China's bottomless money supply. You may say, what's wrong with that? Haven't we seen the same problem in real estate markets everywhere else in the world in the past years? Yes, we have. But what's happening in China is different. Now in 2022, after China's property market has suffered a serious contraction due to a poor economy, bad debts, and oversupply and low demand, one phenomenon that defies logic has occurred. Only the pool theory can explain it. High-end or ultra-high-end properties are selling fast in China because wealthy people treat them as liquid assets. On September 21st, in Shenzhen, the China Merchants Emblem House opened for sales with 604 luxury properties at a starting price of 12 million yuan or $1.8 million. They were sold out in one day with 1,614 people vying for them. The largest unit, priced at 64 million yuan or $9 million, were the first to sell out. According to the Centerline Property Research Institute, 6,370 luxury homes priced over 10 million yuan were sold in Shenzhen alone in 2021, up 126% year over year. In Guangzhou, for example, in the first half of 2022, prices of pre-existing regular home sales fell by 11.2%, but prices for new luxury homes above 10 million yuan bucked the trend and increased by 6.1%. So why are wealthy Chinese buying luxury real estate as investment? A September 1st article from NetEase quoted a Shenzhen high-tech executive, Mr. Zhou, as saying that high-end luxury properties are hot commodities right now. When a company is short of money and go for a loan, you can use luxury properties as collateral. Mr. Zhou and his friends, who are customers of private banks with a minimum of 10 million yuan investable, and who are owners of manufacturing companies in the Pearl River Delta region, are the main force behind the trend to buy up luxury properties in the region. They take out loans from banks and use part of the loan for their business operations, and the rest to buy luxury properties. According to Mr. Zhou, these high-end properties preserve value well and are highly liquid because there's a huge demand for them. This is very odd. Who would have thought that luxury properties priced at tens of millions of yuan are bought as semi-cash equivalents? It has to do with the state's 70/90 policy, which stipulates that 70% of the housing units in a development must be under 90 square meters. This policy restricts the construction of large homes, and it's been difficult for developers to obtain land to build luxury houses. Mr. Zhou said, the more scarce it is, the more it retains value. Since wealthy Chinese can't move their money overseas, they rush in to get in on the remaining inventory of high-end houses. Prices of Chinese homes over 10 million yuan have gone up 11% in 2022 when compared to 2021, according to CRICChina.com, a real estate data service company. However, these people are taking a big risk in gambling like this. The CCP's gigantic real estate reservoir has been leaking and collapsing. When the dam finally breaks, the real estate market will be crushed. China has printed so much money that its total M2 at 238 trillion yuan, which is equivalent to $37 trillion, is more than the total M2 of Japan and the United States combined. So we can't help but ask, if China has printed more money than the United States and Japan combined, and yet its GDP is half that of Japan and the United States combined. Either the CCP's use of funds is highly inefficient, or its currency is seriously overvalued. This brings us to the next topic, the valuation of yuan against the dollar. We'll discuss that in the next video. Stay tuned, subscribe, and thank you. See you next time.